Hi guys and welcome back to Yashi, today with another housing market update. I keep on posting these because I keep on seeing negativity. It makes me very angry because people are not telling you the full picture. So let's give you the full data set and let's also debunk all the arguments you see out there. Guys, the housing prices are based on the simple formula of supply and demand. If people are interested in something and there's few for sale, the price will go up because the same people are competing for less and less of the same product. That's the same reason why Supreme is expensive, why luxury brands are expensive. If there would be as many Lamborghinis out there as there is Fiats, Lamborghinis won't be $300,000, guys. It is very simple, supply and demand. Of course, demand or supply can be affected by many factors. Demand can be affected by what everybody's talking about, mortgage rates or insecurity or people being scared or the expectation that the market will go down because of what the media says. Fortunately, people have been used to watching the media, not by looking at numbers. And just by looking at the numbers that the media provides to you, which are correct but mostly one-sided, you do not get the full interpretation. So let's look a little bit at everything. We're gonna start with the first major argument that decreased demand, it could lead us to a housing recession, which is interest rates. I click right here on record. Interest rates today. Interest rates have been going up. Why? We saw a bad inflation report. So people are scared that the Federal Reserve will increase the Fed rate even more. The market is scared. We saw a little, let's say, reverse trend in inflation. We expected inflation to keep on going down as it did in the past 5 months. But the last CPI report showed some, let's say, stagnation in the numbers. So people got scared, interest rates went back up. We are now around 6.43 on bank rate, on average 6.95, around 7%, same place where we were around November of last year. What does this mean? It is more expensive to get a house, it is more expensive to get a loan. One of the reasons why people backed off from real estate is because they saw these interest rates. It is correct. Now, people are expecting interest rates to come down and it will be again cheap to buy houses. That is, I believe, very far from the truth. This is now my opinion and not financial advice, but I'll tell you this. The state we got used to in the past 10 years of interest rates, mortgage rates at 3%, that is not realistic. On average, mortgage rates across the past 100 years average 7%, pretty much where we're now, which sounds bad if you're used to the 3%, but is on the average level it should be. I believe that interest rates will come down a little bit as the Federal Reserve and the market will stabilize. And I believe that a good number to expect in the future could be around 5%. But 3%, forget that. If you took advantage of it, good. If you didn't, because you were waiting for a crash and were scared when everything was going up, your problem, not ours. With that said, what will happen with interest rates? I don't know. I expect some stabilization as soon as the market, let's say, stabilizes, because right now there's volatility. We also have to see what the Federal rate does, what the Federal Reserve does. We also have to see where inflation goes. If the last report was a one-time thing, then we should see some stabilization. If it will continue throughout also the next report, we might see interest rates going higher for a longer period of time. That's it. Second argument, foreclosures. I see a lot of arguments saying foreclosures doubled compared to last year. It is true, but you're not telling me the full picture. Once again, what is the full picture? Well, statistics is a very interesting thing. If you have one foreclosure in the entire United States, and now in 2023 you have 2 foreclosures, that is a doubling of numbers. And that's exactly what happened. During the pandemic, there was a foreclosure moratorium. I don't know the word, but basically banks were not allowed to foreclose, so foreclosures went to the lowest level in history. And we can see the level here, August 2020 to October 2021. So the level was the lowest we saw in the history of the United States. Once the moratorium was unlocked and banks could start foreclosing, of course, we would see an uptick. Some people took advantage of that and put their financials in a good position to start paying for a loan again, but many people did not and got foreclosed on. This is the level we're at right now. The level is higher compared to the all-time low that we saw during the pandemic. But it is still lower than pre-pandemic levels. And if you look at 2014 until 2020, we're still much lower than that. So, yes, they went up, but the situation is one of the best, if you consider that now it's a more natural market, not forced by a moratorium. So the levels is one of the best of the natural levels we've seen in the history of the United States. We also have to add in, there's a psychological thing that nobody's talking about. Homeowners that bought in the past couple of years are sitting on one of the highest equities in the real estate history of the United States. So even if they're struggling a little, knowing that the house is probably one of the main reasons, one of the main factors that improve their financial wealth, they will put some more effort in paying that loan because they don't want to lose so much money at stake. They'd rather sell it than foreclose on it. That is my opinion again, but talking to people in distressed situations, this is what they're focusing on. This is their main, let's say, their main driver of wealth, and they don't want to give it up. And this is why we're not seeing gigantic numbers in foreclosures. Let's go on to building permits. Everybody's saying how builders will be failing, builders are unloading a large amount of inventory. True, but up to a point. Builders, yes, have been building a lot in the past year. They started a lot of houses because there was a lot of demand, and now they're in a situation where they have to unload inventory. We saw incentives, we saw discounts, we saw many things. But they already unloaded a lot. And knowing that demand is a little tricky right now, as you can see in the numbers, they're not building in the future. They're not preparing to build a lot in the future. We went from almost 2 million permits in 2022 to 1.35, 1.37 million. And the number is still going down. It's plateauing a little bit now, but it's still going down. This is the general trend. So yes, they're unloading inventory, but they're not expected to have as much inventory as they did in the past in the next future. So again, it will affect long-term inventories. We also know that there is a shortage of homes of a few million units. And knowing that builders will be building less, that shortage in the future with a millennial and Gen Z population growing into, let's say, the buying age, the demand versus supply issue will be even stronger in my opinion. So what does all this lead to? We're not even looking at the real market data. We have some issues that we looked at. Could this lead to? What to expect now that we jump into data? We can expect that with builders building less and sellers not selling because there's no incentive. They're sitting on good equity. They have enormous benefits with the interest rates they have now, and there's no incentive in upgrading to double interest with high prices. So sellers are not selling. Builders are building less, mortgage rates are going higher, which will incentivize sellers to keep their homes even more. I expect that inventory is still shrinking. I expect that housing prices did not crash, or maybe they stabilize a little, but they did not crash. They might go down by a little bit, but not a lot. And that pending home sales will be low, not only because there's less demand, but also because there's no houses for sale. If there's no houses for sale, it's less likely that we're gonna have pending homes. So let's look at the data. Active listing. What did I say? Listings are going down. We saw an upward trajectory in 2022 as sellers were trying to sell quickly to buy and upgrade to something new. And now it's going down at the same pace as we saw in 2021, which was a crazy market, which means that even though demand is lower and supply, because of supply going down, we have still a very bad situation in terms of demand and supply, which could lead to increased prices in the medium term future if we see an improvement in mortgage rates. This is my opinion again. We're gonna go now into new listings. How many houses are being put on the market on a, let's say, weekly basis? And again, as we saw active listings going down, we now see, yes, active new listings ticking up, but at a slower pace compared to 2022, where we saw a big influx of inventory, 2021, which was a crazy market, and 2020, pre-pandemic, where we saw a more natural market. The situation is bad for supply. If you're a buyer, keep this in mind. Active listings, we're gonna go on age of inventory. I expect age of inventory to be higher than what we saw in 2022, but I expect it to be lower than pre-pandemic. And exactly as I just said, higher than the other years, because people are thinking twice before buying, but lower compared to pre-pandemic. We have to also keep in mind that 2019 and 2020 were already tricky market situations. We still saw a low inventory, people were still fighting for a house, and we had interest rates that were super low, so people were incentivized in buying. The situation is more hardcore now than it was in 2020. The age of inventory is still lower than 2020, which means, again, demand is down, but not as much to lead us to a market that is super bad. Month of supply, same thing that we saw with the age of inventory. Median sale price. This one will be tricky, and this is the only thing I can, let's say, agree with the YouTubers out there. Median sale price is still above the 2022 levels, so on paper, the market did not crash. However, I'm pretty sure that we're not gonna see a 15% increase in prices from now all the way to May and June of 2023, as we saw last year. Which means that the light blue line in the next couple of months will be lower than the dark blue or black line that we saw in 2022, which on paper will release the news out there that the market is officially in a recession. Wanna bet? We're gonna see in a couple of months, and I'm pretty sure about it. Fact is, yes, the market is down, but from an all-time high. Generally speaking though, we're still higher than pre-pandemic levels, where we had 3% mortgage rates, which was very normal. Now we have double the mortgage rates, and prices are still much higher than those levels. These are the levels of 2020. We're talking about, if at the time prices were 260, now we are at 346. Yes, prices stabilized and went down, but you have double the interest rates and prices that are almost $100,000 more on average than pre-pandemic. Is that really a real estate market crash? Those who bought in the past 2 years, guys, kudos to you. Those who are waiting for a market crash, I don't know. To conclude, as a real estate investor, you might be saying that I'm incentivizing telling people that the housing market is fine because it contributes to my wealth. As a real estate investor, my goal, on top of helping people, from my own perspective, is to become financially free. So my main goal is rental income. It has been proven multiple times, in 2008 is a good example, that when people are failing on their houses, more and more people need to find a place to rent, which drives rental income higher. On top of that, you're able, as a real estate investor, to buy houses for cheaper. So higher rent, cheaper houses. Because of the way I do investing, I'm able to prepare myself to pull out a large equity sum or loan sum to deploy in real estate. If the market would crash 50%, I could immediately pull out a large loan to buy and rent and be retired just like that in a matter of a couple of weeks. So is it in my incentive to tell people that the real estate market is going up, or is it in my incentive to tell people that the real estate market is going down? I believe that in a crash, people like me could put themselves in a much better position if they played their cards correctly. So, while on one hand, yes, it's nice to have equity increasing, on the other, a market crash would benefit me probably a lot more. So is it in my incentive to talk well about the real estate market? That's for you to decide or not. Thank you for watching. I hope this video gave you some good insights. If you like what I'm doing, please like and subscribe. If you have some other ideas that you would like me to talk about, please leave a comment and I'll take a look. Ciao.